Hey, Bulls and Bears, you're watching Bull Boom Bear Bust, back with another dose of economic reality. As always, hey, let's get right into it. Let me fix my mic a little bit here first. Let's talk about some of these headlines here, recent headlines that are very, very deceptive, in my opinion. The consumer is strong because spending is up from August to September. So from August to September, people spent more, 0.7%, a fraction of a percent, not a big increase, but nonetheless an increase. So therefore, the talking point out there is amongst the business and financial media is that the consumer is strong. Well, folks, why is the consumer spending more? Well, because they have to, because everything's more expensive. I don't know how many times I have to say this. I think many of you know, but a lot of people don't know because when you watch the news networks, they're not really explaining it in a way that gives you a realistic picture of what's going on. Right, the consumer is strong because they're taking on record levels of credit card debt. I mean, give me a break. But there's people out there that actually believe this. They fall for this. They think that there's no problems, that everything's fine. There's this soft landing narrative out there that there's not going to be any economic downturn. In fact, the consumer is so strong that prices are going to skyrocket. Home prices are going to go up. Car prices are going to go up. If those things do go up in price, it's not going to be because the consumer is strong. It's going to be because people are borrowing more money, and banks can continue to loan out money even though they don't have it. So that's what's going to happen. Could something happen to stop the flow of credit, aka debt, or the issuance of loans? Absolutely. There could be a law passed that says banks can no longer loan out this money because they don't have it. But the people that make these laws, do you think they're going to vote for that? Do you think they're going to allow that to happen on their watch? So the entire system could come down on top of their own heads and, possibly cut off their own pay? Of course not. Could something else happen beyond anybody's control? We've got possibility of World War III, as we predicted right here in this channel. We said there's going to be conflicts emerging. And what usually happens when you see economic situations that are very, very dire? Well, if all else fails, take them to war, right? So war is something that they can use to pump a lot of money into the system. And some people get very rich off of war. And why is the war possible? That's because we can just print the money, create it out of thin air, and therefore war is possible. If it were not for the system of money, the monetary system, we wouldn't have these wars. Plain and simple. These countries just could not afford it. But when you can take on endless amounts of debt, of course, there's going to be never-ending wars. And now there's going to be a nice excuse for the economic downturn if World War III breaks out. They can say, look, everything was fine. The consumer was strong. There was no problems. We were headed for a soft landing until the World War III broke out. So could that be what's headed our way? And that's going to be the excuse, right? So let's get into some other news here. Oil back up again, 1.5%. We're now close again to $88 per barrel. Of course, we have weakening demand out of the consumer. Does that mean they're spending less? No, because the cost is higher. So people are forced to spend more. And, back to that just for a minute here. How can people continue to believe that everything's fine? When people look at their own finances, they somehow think that they're in the minority or that they're a small segment of the population. Well, no, it's most of the population. We've talked about here how most people, well, way more than 50% of people, barely scraping by, paycheck to paycheck crowd, and that crowd is getting larger, unfortunately. Let's talk about some other news, though, here real quick. Speaking of unaffordability, this is out of Redfin. Home buyers must earn $115,000 to afford the typical U.S. home. That's about $40,000 more than the typical American household earns. So you would think, well, naturally, when things become too expensive, wouldn't the prices just come down? Well, no, because people can just borrow the money to continually bid up the prices of these homes. Now it's getting a little more difficult because there are still qualifications as far as debt to income ratios, things like that, as far as being able to get approved for these loans. So prices are coming down a bit, but certainly not the crash that many people had predicted. And again, I think I was probably one of the only channels I would say the only channel, but I just don't have time to watch all the other channels and see what they're saying. But I was the only channel that I know of that told you that there was not going to be a housing crash. Do I get rewarded for it? No, not really many views here in this channel compared to some other channels that were pushing out, wrong information, right? I'm not going to complain though, because I understand why it's happening. People like to hear hopium, right? They like to think everybody's going to afford a home next year because prices are going to crash. Everything's going to be fine because the price correction will come in just like it always does. The market, the business cycle, the economic cycle, boom and bust cycles. Well, no, now we have banks unleashed, unlike never before, unlike 2008, 2001, every other economic downturn you want to look at before now. Banks are now unleashed, meaning they can loan out money without any restrictions, and that's going to keep the credit flowing. Credit is flowing, and that's going to keep the demand side very, very strong. Does it mean the consumer is strong? No, it just means that the system of money has been completely, basically obliterated, and moving to a completely digital platform. And of course, we all know about the digital currency. That's going to be the next rollout, so they can make things even worse and crazier, and prices will go even way more out of whack from here. I don't know how else to put it. Things are going to get more unaffordable. We've got bankruptcies starting to tick up again, foreclosures starting to tick up, late payments on car loans starting to tick up. We have students here that it hasn't even been a month. October 18th today, and we're more than 2 weeks now into the repayment of the student loans. There's a lot of students that haven't paid back any loans yet because maybe they'll wait till later in the month, depending on when their due date is. But this is definitely close to the end game here for many, many millions, I think, of households. But let's go over some other information here. Mortgage demand has now fallen to the lowest since 1995, folks. That's close to a 30-year low for mortgages. As mortgage rates approach 8%. Wow. Another headline here, CNBC, retail sales up. We talked about this at the beginning. Here's how they're phrasing it, though. Resilient consumer keeps pressure on Fed. So the Fed's going to look at this number, this data. They're data dependent, remember? And they're going to say, wow, the consumer's strong. Look at that. Without realizing the reason the consumer's strong. One, prices are high. Two, the availability of credit, swiping credit cards, going further into debt. So you think the Fed doesn't know that? Actually, I don't think they look too far into it. I don't think they know the underlying issues. If they do know, they're doing a pretty good job of pretending they don't know what's going on. So they're going to look at this and say, oh, wow, we need to keep rates high and maybe even increase rates more because why? The consumer is so strong that they can withstand, they meaning the consumer, they can withstand higher rates. But why are delinquencies increasing? Why are bankruptcies increasing? Because the consumer is not strong. The consumer can't withstand higher rates. Maybe a small fraction, percentage of the population, but for the most part, most consumers are not going to be able to withstand higher rates. So is the Fed just going to look at the increase in spending and say, hey, the consumer's strong? Well, that's according to the headline right here. Resilient consumer keeps pressure on Fed. So it's going to be very interesting to say the least here. We've never seen rates go up this fast. Now, rates have been higher. We've seen much higher interest rates back in the 80s. But as far as the speed of the increase from near zero to where we're at now, not just the Fed funds rate, but just other rates in general, mortgage rates, which has more to do with the bond market. We've never seen rates go up this high, this fast, right? So Bank of America CEO Moynihan says consumer activity has slowed down because of higher rates. Wow, so at least somebody is out there telling a little bit of reality here, right? And they have to come out every once in a while and say what's really going on. That way, when everything hits the fan, they can say, look, we told you. But most of the time, 99% of the time, it seems like it's, fake narratives, false hope, optimism that really shouldn't be there. The consumer's strong, a lot of rosy headlines like that to keep people complacent, to keep people thinking that everything is fine and that their debt is just the exception. They're the only ones in debt. Everyone else is doing fine. Also, something else that's pretty interesting. We're seeing a big surge in banks closing. Let me just look this up here real quick. We had Bank of America closing a lot of branches here just in the past few weeks. And the big talk amongst banks right now is the profits. Look at profits are up. Profits are up. Of course, profits are up because the higher rates and the higher amounts of debt that people are carrying is making the consumer have to fork out more money over to the bank. Bank of America profit rises 10%. What they don't tell you is in the background, they're underwater on billions of dollars worth of bonds, and that they don't have the money they're loaning out. They have barely a fraction of a percent of the money in deposits that they're loaning out, which is very dangerous. But the way the laws have been twisted and manipulated, it allows banks to do this. Here's a headline right here. Reuters just came out recently. Bank of America's unrealized losses on securities rose to $131.6 billion. Yet the bigger headline is profits rising 10%, right? So that's like somebody that has a $500,000 in debt, but they're bragging to you that they're making, $22 an hour and how much they're earning. And last year they were only making $20 an hour. So wow, look at this increase. Look at this 10% increase in my income. In the meantime, they've got $500,000 in debt, credit cards, and you name it. Right. So that's just some of the games that are being played here, folks. I think most of you are onto it. I'm going to wrap this one up here. Thanks everybody for watching. Please let me know if you agree with me. If you don't agree, add to this conversation down below. If you haven't checked out our comment section, please look down there. Very smart people are down there, and I learn a lot from reading the comments on this channel. Also, quick note, I used to have this little website blog that I posted to. It had a bunch of links to different news sources, and I would post my videos there. I completely shut that down. Why, you ask? Well, people were going there, and then I would get emails saying, why haven't you uploaded? Why haven't you uploaded? Well, it's because I quit uploading there. I just don't have time. So they weren't going to YouTube, which I upload to all the time. They were going to this site that I haven't uploaded to in months. And some people were even asking, what happened to you? So I just got rid of the site. Don't have time to do it. I barely have time to upload to YouTube, basically. So you might get a video a day, sometimes more. Sometimes maybe I'll skip a day now and then take a day off. But this is where it's at, this platform. Please like, subscribe if you like what we talk about. And we'll talk to you very soon, everybody. Keep stacking. Stay resilient. Bye.